Sound of Money with Santosh Sirur.
Hello and welcome to another episode of The Sound of Money. Well, the focus of this episode and a few more episodes going all through in this 2023 is on mutual funds as an asset class, and more importantly, is this a good means of investing? To add and to talk about it on this show, on this episode of The Sound of Money, with me is Vishal Dhilla, who is representing Gateway Capital. He's been a financial coach, in fact, working with 200 plus families, be it professionals, be it retirees, be it business owners, and even NRIs. And this is exactly what we want to talk about in mutual funds. We're not going to go into the technical analysis of mutual funds. I don't think that's something that we would love to get into, but talk about how is it that a mutual fund can help you and me in making something amazing and well worth in the end of the life, right? That's all about it. Hi, Vishal, and welcome to The Sound of Money.
Thank you so much. And I would like to first kind of uh, acknowledge that the amazing work that you are doing of imparting knowledge through your Sound of Money medium. Basically, it makes people think about certain decisions or certain topics which are important, but
Yeah,
generally are not on top of their mind. So you're
yeah.
doing a great job out there.
Thanks, Vishal. Yeah. So, Vishal, let's go straight into the show. I think anyone who starts getting into this investment habit, and I'm talking right maybe from a student to a professional who started a new job, or even retirees who probably didn't have the kind of investment avenues and when they were working in that part of life. The question is, and they were very traditional investments, like we all know, the fixed deposits, the savings accounts, and the recurring deposits. And I do know mature the mutual funds have really matured over a period of these years, right? But still, there's a very fundamental question, and the question is, what is the purpose of investing?
Perfect. In fact, I would say you have hit the crux of the thing, because whether it's a mutual fund, whether it's a deposit, whether it is any instrument, these are just ways to a end, right? It's not the end result.
Yeah,
So everyone, whether it is somebody working in a private job or a public sector or a business owner or a doctor, lawyer, whoever it is,
mm,
you have to first, like you rightly mentioned, find out what makes you happy or what makes one happy. So when we talk to so many families in over the last 18 years, we have maybe dealt with more than 300-400 families. The only question which we ask is that what makes you happy? It's
mm,
a very broad question to make them think that what do they want,
mm,
right? And predominantly, 95% of the cases, I would say, most of them want to be happy, right?
mm.
And when you dig deeper, that what makes you happy? When you ask what makes you happy,
Yeah,
it is like I want to see my family happy,
mm,
right? Okay,
mm,
so what makes your family happy or what makes you happy? It
mm,
is that I want to be independent,
mm.
right? So, without using any jargons or words like retirement, planning, goals, people have these things in their mind, at the back of their mind. It's just that they don't think about it
Yeah,
actively. But
mm,
when you ask important questions, these things do come out.
mm.
So when you ask them that, what do you want? So they will say, I want to spend more time the way I like, right? So there are so many people who would be doing stuff which they don't like, but they can't quit because a, they might have a big mortgage,
Yeah,
b, they want to pay the bills, obviously. So so the biggest thing which people say is that I want to be independent,
mm,
right? So you can use whatever word, retirement, financial freedom, independence, but end of the day, that is what is required. So when we talk to any family of ours, we normally ask them, or rather, we find out that what is it that you need. Just imagine, Santosh, that if anybody doesn't know how much money they need in their lifetime
yeah,
or what they like to do, what will happen, right? What will
right,
happen is that you will keep running on the treadmill without knowing when to stop,
yeah,
right? So basically, the idea is to find out that what is it is required in life of a particular family,
mm,
and then you find out what is it that is required to meet, what
Hmm.
are the costs or the actual dollar cost of that,
Yeah.
and then you work backwards that what you have accumulated,
Hmm.
is that enough, right? So the key word here is to find out, does anybody, any
Hmm.
family have enough for what they need?
Correct.
So that is how I think the purpose comes through.
Yeah. So Vishal, I'm sure when you meet your clients and anyone for that matter who thinks about mutual funds or any other kind of investments, uh, probably when it's a large facade, we're talking about right from marriage, education, and
Yeah,
that's really
yeah,
years away, depending on the age of the person, and also
yeah,
family coming into the picture. Do
yeah.
you get a sense that a very typical investor has even got an idea to the extent of what that planning needs to be?
So you are right. So predominantly humans are not very good at planning. Everybody
Hmm.
wants instant gratification. That I can
Yeah.
buy that 20 lakh car. Let's go ahead and do that. I
Hmm.
love that locality. If the flat costs 3 crores, 5 crores, let's go ahead and do that. There are
Yeah.
banks ready to give mortgage for the same. So you
Hmm.
are right that it is not very easy for clients per se, but if you get them thinking, if they are on the right track. So basically, you have to put a process
Yeah.
where they are in that boundary where they know that this is how I have to think.
Hmm.
Eventually, like after the first 2 years, we have seen families are now starting to talk the language we talk,
Hmm.
right? So they say that, oh, my expenses when we started with you was say lakh a month. Now it has increased to lakh 20,000 or lakh 50,000.
Hmm.
What has changed? What is the retirement purpose which is required? So,
Yeah.
like you said, it is not initially possible to find out for them to understand the value of this discussion. But
Yeah.
once a year or two of reviews, they also fall in line and they talk the same language.
Yeah. And when it comes to, and this is what my next question is about, what exactly is it when we talk about a mutual fund? Because a lot of people, right, and I'm talking of a very average individual, uh,
Yeah,
traditionally India has this saving mindset, right? And it's very much the question about safety, liquidity, and you need it anytime you need, right? You go to your neighborhood bank, you open a savings account, which is very obvious. Then it's okay,
yeah,
fine. This is I want to get into savings kind of a mode. Then you may go into the recurring deposit, or if it is something long term, then I will go in for a fixed deposit. A very traditional mindset. That could
yes,
be one. And the second probably is that unfortunately, for whatever unfortunate reasons, the scams that have been there associated with the stock exchange, and when one gets to know that, oh, your mutual fund is also into related to stock exchange, because eventually it's investing in companies. So that kind of
yeah.
mindset, fear is there within them. So maybe you can demystify this whole concept of mutual fund for us.
Sure. So first thing first, what you spoke is talking about risk. Okay, so risk is everywhere, right? It is not about whether there is risk. It's about how you manage risk,
Yeah.
right? So I would say whether it is the banks which have gone turtle or some instances here and there,
Yeah.
despite all of that,
Hmm.
what you have to see is that does the instrument give you credibility? See, ultimately, most of the clients don't want to take risks. So that is why the affinity towards real estate or fixed income deposits or recurring deposits comes
Yeah.
through. So if
Yeah.
you take India as a pie chart, you
Hmm.
would see roughly about 50-52% in physical assets, whether it is gold and real estate. The bulk of the other big portion will be fixed deposits, endowment schemes of insurance companies, so on and so forth.
Yeah.
Very minuscule percentage, maybe 7% or so, would come into market linked instruments, right? But coming to mutual funds particularly, I would say it's again a misnomer. So out of the 40 lakh crore industry in the mutual fund
Hmm.
currently,
Hmm.
uh, maybe more than half is into fixed income instruments,
Hmm.
right?
Okay. Yeah.
So basically, a mutual fund is nothing but a pooled investment vehicle
Yeah.
where anybody who has certain goals
Hmm.
can participate if the goals are as low as 1 day. So we have something called as an overnight fund which invests for just 1 day. That's it.
Hmm. Hmm.
And there are funds which invest long duration bonds which are for 15-20 years as well,
Okay.
right? So between 1 day and a very long 15-20 year and everything in middle, right? So there are a lot of categories. In fact, there are more than 30 plus categories spread across equity, fixed income, hybrid, commodity funds, gold, silver, other commodity. So there are a lot of categories of funds. What is more important is that what is important for you to kind of, does it help your purpose? So every mutual fund in India has something called as an investment objective. So
Okay.
what is the, again, the key word here is that if the investment objective of a particular fund meets your investment objective
Mm.
to meet your goal,
Yeah.
is when you should take that decision.
Mm.
But again, certain very basic factors about mutual funds are that it is a professionally managed, so
Yeah.
that you are not, you are using your mind in your profession, your business, your job, or whatever you are doing.
Mm.
But there is somebody who is actively doing it as a living,
Yeah.
meeting those companies day in, day out, doing company visits, so and so forth.
Mm.
So A, it is a professionally managed instrument where there are experts, there are analysts who are doing that. B, it's a pooled vehicle. So
Mm.
everybody is treated at par. So whether you are investing a lakh or 10,000 rupee or a crore, everybody has a common NAV for a fund,
Yeah.
right? So that again brings a level of consistency.
Mm.
Third, very important is the tax efficiency.
Mm.
So a mutual fund, when you and I own, say, a stock in our own name, and
Mm.
if you tend to sell it before a year or after a year, you end up paying something called as a capital gains,
Yeah.
right? But because in a mutual fund, the structure is of a trust, even if the ideas are churned or sold and the new ideas are bought, it does not get taxed because the structure is of a trust.
Okay.
Right. So again, coming to the client perspective, suppose
Yeah.
your goal is say for 10 years,
Mm.
right, or 5 years. And in the interim, there are ideas which are replaced because of, the fundamental changes.
Yeah.
When you do it on your own in your stock name,
Mm.
what happens is you end up paying those taxes.
Mm.
But when it is done in a mutual fund structure,
Yeah.
even if it is replaced, you don't end up paying the taxes till you sell it,
Mm.
right?
Yeah.
So in the 5 years or 10 years or 20 years of your holding a fund,
Yeah.
if there must be maybe 200 ideas would have entered and exited, you
Mm.
don't end up paying those taxes till you exit.
Okay.
So I would say
Okay.
those are the few important points for the mutual funds.
Okay. So Vishal, there's a very interesting question, and again, stepping into the shoes of a very first time investor who has not even thought of getting into mutual funds and wants to get into it, right? Let's guide that investor. What he or she starts needs to start with, because he or she may not have the professional knowledge, I mean, let alone getting to know about what are liquid and all those kind of
Yeah,
funds. What is the
right.
step, and does he get advice or help from someone?
So again, good question you asked. Whether they are aware of the nuances or no, but
Hmm.
they are aware of their needs,
Yeah.
right? So like, say, example, like you said, if a person does not know when to start or what to start, but they do know that they need to have some emergency corpus, which
Yeah.
means they need to keep certain years of or months of money safe in a particular place, and then
Yeah.
we can call it an emergency, contingency, whatever.
Yeah.
There is a certain portion of investors, say a retiree, who
Hmm.
wants a fixed income, which means they need a regular income.
Hmm.
So they can't take a risk beyond a certain point. So basically, investors might not be aware of these technical terms, but they are very much aware of what they require.
Hmm.
And again, when they sit with expert, the expert ideally should find out that what do they need,
Yeah.
when is it required, what is the future cost
Hmm.
of what is required,
Yeah.
and to again find out that what they have, is it enough to meet what that is required, and if not, what changes are to be required.
Okay.
So this is typical process which most financial coaches would do, whether anywhere in the world, I would say.
Okay. So get more about the importance of this guide or the financial coach or the expert himself, right? What are the kind of expectations that a very new investor could have?
So I would say this is one of the most important point after the purpose. If something which is second most important is, whom are you dealing with? Whom do you trust your money with?
Yeah.
Because what happens is, if you take, say, any CEOs of large companies, or even if you take any successful athletes, they
Hmm.
will be surrounded by coaches.
Yeah.
right? You would have a strength coach, you would have a stretching coach, you would have a mindset coach, a strategy coach, uh, a nutrition coach, many more,
Yeah.
right? So what happens is that when you have somebody who is taking care of what you require, then you are on track. Because most times we have seen the biggest enemy of the investor is not markets or certain events. It's the investor himself, the
Mm.
behavior of the investor themselves.
Mm.
So the coach is, I would say, after the purpose, the second most important thing is whom do you trust your money with,
Yeah.
right? So what, if I can give you an example of what we do at Gateway Capital, we you have to actually find out what is the value that your coach is adding to your financial life,
Agreed.
right?
Yeah.
So basically clarifying the goals, setting up a process to make decisions
Yeah.
which are personalized, which are not generic, but
Mm.
personalized to your life, because your neighbor or your family friend might have a different need or different risk profile than yours. So
Yeah.
what is I would say very sexy to do may not be relevant to you,
Mm.
right?
Mm. Mm.
Uh, Lastly, you have to ensure that it is enough for you. You can't just keep running. So if money is the only thing which someone is chasing, there is no end to it.
Yeah.
So
Correct.
basically, a financial coach. In fact, we try to teach after certain goals are met. We are now trying to help our clients spend money, because spending money once you have been at a certain lifestyle is very very difficult,
Yeah.
right? So once they are sorted, then they have to actually now start spending what they have accumulated for.
Yeah. Agree. A very typical, again, investors get to hear these. Of course, savings, investing is very common, but then there are
Yeah.
these behavioral patterns expected, or diversify your risk management, etc., etc. Maybe if you could just give a peekaboo into what are these kind of concepts that, as a listener, one should know.
So, like you rightly mentioned at the outset, Indians are very good at savings. What they are not very good at is investing. So, they believe that once you save the money, it is
Mm.
already the job is done. It is not. Uh, Once the savings are done, you have to also invest it well.
Mm.
And even the savings has very big nuances. So, for example, you can't save at the cost of your current lifestyle. You don't
Yeah.
want to be miserable today and be very happy later. That's not going to happen.
Yeah.
So I would say savings is a very fine balance between a good present and a very bright future,
Mm.
right? So that is something about savings which I think everybody should find that right balance when they sit with their financial coaches.
Mm.
Uh, Second thing is about investing. Uh, like I said, if it is compounding, don't interrupt.
Mm.
If you have if you know that the goal is 10, 15, 20, 30 years away, if a retirement of a 25-year-old is 30 years away,
Mm.
don't mess with the compounding every now and then. Just
Mm.
imagine, Santosh, that you put a seed thinking that now it will sprout, and you just keep waiting for a couple of days and then you dig again to find
Yeah.
out if it has sprouted. The
Mm.
entire process is again kind of the plant is dead,
Yeah.
right? So most times, again coming to the behavior part which we spoke of. So the biggest behavior most times of investor is the behavior,
Yeah.
and it is not their fault. There is so much noise which media throws at them.
Yeah.
Greed and fear plays on their mind, but
Mm.
ultimately what matters is that if you stay the course, then most likely we have seen people have met what they require for. So it is more very important to I would say be patient, especially when, for example, COVID was a classic case,
Mm.
when at that time people suddenly it was something new
Panic.
which came up,
Yeah. Yeah.
panic. But if anybody who just waited, say for 6 months to a year, things are normal. Whether it was
Absolutely.
2008 crisis, whether it is health crisis like COVID or any crisis in the past you take.
Yeah. Yeah. Absolutely.
So behavior, I would say, is very important in investing.
Absolutely. In fact, in my previous episodes of The Sound of Money, we've been talking about, it was a two-part series called India Ahead, and where one gets to know the kind of India we look forward in the next decade, right? It's really a power horse, and it's really at a absolutely breakneck speed, which is very, very good for the country and the development, you know. So, I think as a listener, I guess the probably the message you're sending is, just forget the utar chadaws of the stock markets and just sleep in peace, and do the SIPs, right? That's very important. Very good. Thanks, Vishal, for joining on in this episode of The Sound of Money. And of course, for our listeners, Vishal Dhilla will be joining us for a couple of episodes on the forthcoming episodes of The Sound of Money, talking about mutual funds and not going beyond mutual funds as to what exactly one can achieve from this. It really, so today was a base episode, I would call it, a fundamental episode. But yes, he'll be joining a lot more. So here's Vishal Dhilla, who is representing Gateway Capital and has been a financial coach for 200 plus families. Thanks once again, Vishal, for joining us on this episode of Sound of Money.
Well, thank you so much, Praveen.
And well, that's it from this episode of The Sound of Money. We'll come back to you once again on a few more episodes. Till then, bye-bye and take care.
Sound of Money with Santosh Sirur.